In the real world, goods get returned all the time. So a customer could return goods because perhaps they were the wrong color or size. They're not fit for the intended purpose, the reason why they bought them. Could be because they're the wrong brand or style. Maybe they were delivered late and they're not required anymore, or perhaps they're damaged or faulty. So these are all quite common occurrences. And regardless of the reason, we need to be able to account for goods that have been returned. So the document that we'll use to record this is called a credit note, and it has some similarities with some of our other documents. The name of the person issuing the document is at the top. So in this case, Wholesale Trading is the business who sold the damaged or unwanted goods. Elsternwick Electricals is the customer who's now returned those goods and they're getting a credit for them. We've got a credit note number, so each one will have a unique number. And we also, on a credit note, usually have a reason, so an explanation of why the goods have been returned. So in this case, it says they were damaged in transit. So usually the flow of goods goes, the supplier sells to the business, and that's called a purchase. The business sells to the customer, and that's called a sale. Well, this is the opposite. The goods have now come back from the customer to the business. So the opposite of a sale is a sales return. And then we're going to send those back to the supplier. So the opposite of the purchase originally is a purchase return. So just to reiterate, when the business is the one returning the goods, that's a purchase return. And the reason is because the business was the one who purchased originally. So from our point of view, we are returning a purchase. When a customer returns goods to our business though, that's going to be a sales return because from our point of view, the original transaction was a sale. So just take an example, we are Classic Clothing, our business, and we are selling goods on credit to Jim Johnson. We've sold him 3 jackets for $70 each plus GST. They've actually been brought back, they've been damaged, and Jim Johnson has been given a credit. So we'll see the document up here. We can see that the name of the business at the top is Classic Clothing. And that's because we are the ones here who is issuing the credit. Now, the person that's being issued to, their name will appear down here. So it says it's being issued to Jim Johnson, and that's because Jim Johnson is the customer who's bringing back the goods. You can see the reason for the goods being returned, that they were damaged. And we've also got the quantity and amount, unit cost of each one, plus some GST. So what will happen is the business is going to return those back to the supplier, and we're going to get a credit for $30 per unit. So all of a sudden, the name at the top of the document's changed. Now it says Wholesale Clothing, and the reason it says Wholesale Clothing is because they're the ones here that are issuing the document. So that document has been issued to, in this case, Classic Clothing, the name here, and that is us because we are the ones that have returned the goods to Wholesale Clothing. And the goods that have been returned, there's 3 jackets for $30 each, and the reason is that they were damaged. So just to reiterate the positioning of the documents, the business issuing the document, their name will be at the top. That'll be the business that's issuing the credit. So Classic Clothing issued a credit to Jim Johnson, and then Wholesale Clothing issued a credit note to Classic Clothing. So we need a document to record this on, and also a journal. So is there any cash being received in this transaction? There's actually not. So it's not going to be that type of, it's not going to go on the cash receipts journal. Is there any cash paid? There is not. So there's not going to be a check butt or a cash payments journal. Is there a credit sale? Well, there was originally, but the transaction we're recording is the returning of a credit sale, so it won't be in there. Is there a credit purchase of stock? Again, it's the opposite. It's the business returning purchases, so it won't be any of those documents or any of those journals. What we'll do is record it in our general journal, which is our journal that we've been using to record any other transaction. And we've been doing those in memos. Slight difference is we're obviously going to use a credit note, which is the document we just saw earlier on. So all returns will be done in the general journal, and the document that's going to be used is going to be the credit note.